TGIF Warriors. How's everyone doing? Hi, Alexander, AJ, Ingmar, Kman, Charles, how are you? Monir, welcome to F.A.C.E. Hi, Paul. I notice in this live squawk feed that the B of A has stolen the name of your show, Kman. B of A is
Good
the
morning,
flow.
Dale. Good morning,
Morning.
everybody.
B of
I don't
A.
know whether I don't know
Huh?
whether they have stolen it or whether it's just a coincidence. But I suspect some people are looking at our shows, and then they
Yeah,
go,
that was it. And anyway, or
"Someone's
are
typing in the
you,
background, making noise."
or else, they're just live streaming your show and calling it
Yeah,
theirs. Anyway, you have a good
noise in the
lawsuit here.
background.
Yeah. All right. So key question came in is this a breakdown in US dollar yen under
Well,
150?
it is an initial breakdown, and it was the theme that I spoke about on the Flow Show as well this morning, together with bonds and yields. And finally, the yen is responding to what's happening elsewhere in yields markets, and it's really. Is that you, Blake?
Yeah,
Tapping?
it's me. I don't know who that is. Don't worry, I'm trying to figure that out.
Okay. No, so I was saying, yes, this is really the yen starting to respond to all those bond and yield moves, and it can last. It, as I was saying in the room, it has a little bit of a November 22 vibe to it, because but then it was like merely dollar yen. But now, since all the yields are coming off, and if you look at differentials between euro and the dollar and the UK and the US, they are not moving much at all. So you have cable and the euro, okay, dollar a bit weaker because it's the bigger market. But then finally, the yen is starting to respond to all of that. So it has this November 22 feel to it in a different way, but it could be the start of something. And I think next week is going to be telling. If the yen holds its ground and continues through another round of US Treasury bond issuances, then it could be bingo for a very nice end of year for the yen.
I'm putting it all on black, K-Man. I am.
Okay,
It's
so
it is it and hey, thanks for the explanation of the yen, because it has really it's broken some technical levels today, some pretty key technical levels.
It has.
Yeah.
Yeah, it really has. And the thing is, it has not only, and that's encouraging actually for the yen today, it's not only versus the dollar, it's versus the rest as well.
Yeah.
And the thing that we were saying, like, it's really those crosses in the yen, they won't give up, they won't give up. Well, finally, they are showing signs of giving up. And I think that's pretty encouraging right now. But again, is it a 2-3 day move? And then next week it's again reversed because we've seen it already happening this way, or is it really the start of something? That is, I think, the key is next week.
okay,
Yeah.
so say for example, people missed the decline in the dollar, the rally in euro. Um, what's a plan? What do? You just sit on your hands and wait for a pullback, or you just hold your nose and short the dollar here?
Um, hmm. Well, I mean, that's a very good question.
Well, that I mean, what else is there to really, it's kind of an important
the
thing.
dollar,
I
you
mean,
mean?
it all changed in one day pretty much, didn't it,
Yeah.
after the CPI? So what do? You just watch it and be patient and let the first wave happen without you and wait
Hmm.
for a pullback, or do you
Yeah.
just launch and get short the dollar and
Well, I wouldn't blindly short the dollar because we are still above the 432, 35 support zone in the US tens. But we there as well, we have broken this trend line support. I am not blindly shorting dollars. I'm still nursing my 150.5 put in dollar yen on the dollar side, but I'm not short dollars against anything else. And if I want to be short dollars, it's likely not going to be versus things like the euro or the sterling, but I will perhaps look at an antipodian or, you know, what is coming off relatively swiftly now is dollar
Nope.
China.
Oh yeah.
Yeah, it broke
It
today.
kind of, it was a tell when the yen was making a new high. This is all the yuan could do. Same
Yeah,
time period.
Exactly. And you know, we spoke about that, and I was a bit too conservative trying to wait for 732, 33 again. But we sensed that the mood was starting to change, right, in Chinese yuan, and it responded. If you look at the amplitude of the dollar yen versus the top, and where we are now, and the yuan is actually doing more than the yen in percentage wise.
Yeah. Okay. Aussie up. Commodity currencies up. What do you think?
Yeah, 65
Top
minutes.
and are we? This would be the second lower high in Canada. What do you think?
Is that you tapping on your desk or keyboard, Blake?
Nope, I'm just sitting here.
Yeah,
Oh.
I don't know what that is. Maybe it's, you know what it is? It's the website.
Could be, but
And
somebody's
things
tapping
change.
on the keyboard as well, and it's quite a yeah.
No, it's it's ForexAnalytix. When prices change and stuff, you get little clicks
No.
sometimes,
I'm
right?
hearing a lot of noise actually.
Really? I don't hear anything.
Maybe my side, huh?
I
Yeah,
heard little
it could be
clicks,
because
but
here, you know since you're hearing that what I Kman, what I would do is I'd log out and log back in, and I'll chill here with Dale for a second.
Yeah,
So
sure.
Dale, we had on just going to the dollar Canadian, there go intraday, and there was a really nice intraday inverted head and shoulder pattern yesterday. A lot of us wrote it up from 137, like right around here,
you mean right here,
137.20.
this little thing here?
Yep. And we wrote it all the way to 70s, and then we reversed, and we're just developing like a triangle. You know, you asked Kman a little earlier about the dollar. I blogged about the dollar yesterday, and I purposely, you know, well, first of all, I'm long dollars, and I've been establishing long dollars this week because it's been, if you watch the week ahead video for the last 2 weeks, it's been, my plan has been shorting the euro up at these levels, so I'm already establishing positions. The Aussie also, you know, it's kind of giving away some clues here too. Then you know, the other thing about the dollar is I think a lot of people are writing off the dollar, very over exaggerated moves, but next week we have PMIs, and the PMIs that are coming out of Europe have been atrocious, and you know, you have to really, I think those numbers are going to be really scrutinized early next week. And next week we got a lot of stuff happening. We got earnings, more earnings from we got Nvidia, and that's like one of the big ones from next week. We've got a lot of retailers. You know, I think either Home Depot or Lowe's reports. We got like Nordstrom's, a lot of retailers. We got some meeting minutes. And then, if I'm not mistaken, on Friday of next week, while we're kind of on a you know, post Thanksgiving you know, half day, if you will, of trading, we're going to have our PMIs, manufacturing and service PMIs, early in the morning, which could be a real market mover on Friday during very thin liquidity. You know, everybody's betting against the dollar right now, and that's like the big trade at the moment. So if those numbers, you know, don't confirm that the US economy is truly weakening, you know, you could see some pretty big volatility next Friday. So next week's going to be a big week, and we got inflation data out of Canada. So a lot of things happening next week.
Well, it probably wants to test that 103.60 level first, huh?
I don't know, Dale. You know, you've been pretty steadfast about looking for dollars, looking to be long dollars down here. And you know, this is for the last couple of months. Now that we're here, don't get cold feet on me, man.
I just think that one day in the CPI that changed the whole complexion in metals and the dollar, is going to be hard to overcome when you look at it on a daily. But you're not. Go
Oh,
ahead.
go ahead.
There, this.
Yeah, but I think it was a culmination of things too, Dale. I don't think it was just CPI. I mean, CPI was kind of like that last gasp that we got in the dollar, this last move that you'd seen down. But remember, it all started with like, treasuries, the auction, the Fed. I mean, it's all kind of been weighing on the dollar. Now the dollar has gotten the pullback, but as if you extend that blue line across the tops there that you have, that the previous channel, we're well, actually it's a little bit different here. I can show you if you want me to.
All right.
I mean, it's
internal line.
No, you have to kind of go zoom out a little bit, and
well, go ahead, take it, and
yeah. And by the way, it is Nick, our new team member. It's his birthday today.
Oh,
he's at an age that we wish we were, Dale.
Yeah. Is he in the house here?
I don't know if he's in that. Yeah, he's in the house.
I
Say
am.
hello,
thank you very
birthday
much,
boy.
guys.
Yeah, Nick. How old? 25?
27.
Yeah, enjoy it.
Enjoy those ages. I'll tell you, when I was 27 was about when I started the brokerage firm, Centerpoint Securities. So yeah. Anyway, well, with
happy birthday to you.
Oh yes, we get it.
Happy birthday to you.
A nice birthday would be a dollar reversal back a little bit higher.
Happy birthday, dear grasshopper. Happy birthday to you. There you go, buddy.
Awesome.
Serenaded on face.
So Nick, you say a happy birthday would be a rally back in the dollar. So the dollar is at support. I mean, this Dale. So this is the that previous channel that I was talking about. Right in red. Actually, what I'll do is
a few weeks ago I said 104, but Blake, to me sometimes it's not just the price, but how it gets to a price.
Yeah, of course. Yeah.
And when it gets to a price in a hurry, I think sometimes something else is going on. Instead of just trading down there, it was like little mini breakdown. So anyway.
Yeah, and that's the thing. I mean, I do think we're at some pretty critical levels. Let's just not forget, this is a 38% retracement of the entire move after that false breakdown too. So we are at pretty critical support around these levels for sure. And what's weighing on the dollar this morning is overall it's the yen. And Kman, are you still hearing that sound?
Yeah, but it's my end and I can't find it. So no, I'm still here. I'm here.
Okay, yeah. I don't hear any sounds that you're talking about. But I wanted to just show you guys the yen, and this is, I'm going to go across the board. If you were in here, I'm going to just show you the ForexAnalytix chat room really quick. Let's go into, and by the way, this is that was happy birthday, Nick. There you go. Happy birthday from me. That was from me, by the way.
You look good, Blake.
Yeah, thanks. I look good when I take off a few things. So this is obviously going into early this morning when you and I were sleeping, Dale, and Kman was doing the flow show. But if you kind of go back here, and let me just let's see, where in the I got to go back to yesterday. Let's see, that was good morning everyone. That was from this morning. I'm trying to go back to last night. Let's see if I can get to it. Anyway, what I was pointing out yesterday was that we had a bunch of reversals in the yen, and let me just kind of point them out to you. So we had this reversal in the euro yen at a kind of a pretty key 161% extension, getting a little parabolic, but divergent relative strength. If you look at the pound yen, we had a false breakout. The Aussie yen, false breakout above multi-year trend line. You can see it right, almost a decade-long trend line. New Zealand yen, also false breakout last night, and you can see the big reversal. This is dark cloud cover, by the way. Canadian yen, lower high. And if you just putting it all together, then you got the dollar yen that hasn't broken down yet, but now here we are breaking down. Let me just show you this channel that we've all been kind of staring at this channel for the last couple of weeks. So now that we're breaking lower, and it's interesting, Kman sniffing it out. A lot of people are looking at these yen crosses now as failed breakouts, and maybe that's. And I wanted to ask Kman, maybe that's a result of just lower yields, with yields starting to fall.
That's exactly it.
Yeah.
It's lower yields everywhere, and we've been saying it. I mean, for the yen to lastingly recover, we are going to need the rest of the world to fall apart around it. And it's not falling apart, but the yen is waking up to lower yields everywhere else, and that is really what is what's driving it. And likely, those positioning people just buying process every day, likely model funds, whatever. It started actually this morning. It started a little before, of course, during the night, but then the acceleration really came at the opening of Europe. So there must be some strong hands really having bought back probably yen that they were short of, and that causing those breaks.
Yeah, it's hard to get. I mean, we had Ueda speaking last night, and he sounded like this is not the time for them to be adjusting monetary policy. Wouldn't it be interesting to see a reversal in the yen without any official action? I mean, you feel like maybe nature's going to run its course here. I mean, what are your thoughts there?
Yeah, that's the thing. For it to last, yen needs to start reversing on its own, not interventions. But of course, the Bank of Japan can help. Ueda is changing, as I said, word by word, not really changing the whole ship around, but word by word. But we are getting closer to that normalization, and overnight was not a big step, but then there's like this word here and there. But he's basically still sending us over to the wage negotiations in February, March to effectively start changing monetary policy.
Yeah, and so I mean we're still looking a whiles away, but it would be interesting to see if we start to see some yen strength, maybe as a result to yields dropping across the globe, and I think that's what we're ultimately dealing with. Hey, let's shift gears a little bit. So we have some earnings like Nvidia next week. There, like I said, it's going to be a kind of a shortened week for at least the U.S. markets, because we're celebrating our Thanksgiving holiday. But we have PMIs.
Friday off, Blake?
We're gonna still broadcast. I think I'm gonna still broadcast. You can enjoy the day off, but we're gonna have PMIs
I'm
coming
going to
out
see my
day.
sister
Thursday.
Thursday.
Please enjoy.
Okay.
Go enjoy. Well, but Steve always likes to broadcast, even if I choose not to on Fridays. Steve likes to come in, and Stelios does,
Right.
but I think I'll be broadcasting this next Friday anyway, just because we will have PMIs coming out, and I think this US exceptionalism versus not is going to be a theme moving forward, especially as you're trying to figure out which way central banks are going to be moving from here, as everybody's everybody's at roughly a neutral rate. But I did want to say that look at Nvidia and look where we're at, really key levels of resistance, and I have a feeling that next week is going to be a make it or break it for Nvidia. It's something I think that we all need to be paying attention to.
Maybe we get a false breakout or something too.
Maybe, and I think
double.
I think the weekly close is going to be really important, right? I mean, where we end up being.
Boy, was that a head and shoulders fake out. I
Right,
started
yeah.
shorting it at the top of the right shoulder, and I thought I had a breakdown.
Oh yeah, right here, yeah. That
I
you know,
never
head and
would have
shoulders are.
imagined. Yeah, I never would have imagined it being at new, challenging the highs in 2 weeks.
Yeah, I mean, it's
Less than 2
it did a little false breakdown and then
Yeah.
reversal. I mean, you know, it's a
Beast.
gnarly market that and it's the stock that everybody wants in. You know, everybody wants the next Apple. You know, everybody wants the next Microsoft of 20 years ago, Apple of 13 years ago or whatever. And so Nvidia has been that name. So we'll be watching this one really carefully going into next week. Kman, we have some meeting minutes from the Fed next week. Do you think those are going to be market moving? I do.
No, I don't think so, because we will have heard from all the Fed speakers before then, and we are on them now. I think if they had anything special to say, they would have said it by now. So I don't think we will see any surprise in the meeting minutes. Let's put it that way.
Got it. Okay. All right. I still think it's going to be a mover. And the reason why I say that is just because the liquidity is going to be poor. I agree with you. I don't think we're going to have anything new being said, but because liquidity is going to be so poor that anything that doesn't sound like it came from it, sounds a little different than the course that we've been hearing, could cause a bit of volatility. So it's that to me is something that I'll be watching. But you guys were talking about the US dollar CNH. I mean, this is a big breakdown overnight. This one right here that you were just discussing, that's a big deal.
It is.
Go ahead.
Yeah, no, I'm just confirming what you said. It is.
Yeah. I mean,
the thing is, I think it's turning around.
Yeah, I mean, I just looking at it technically. Now, this should be realistically supportive of risk. The US dollar CNH moving lower and the CNH moving higher should be supportive of risk appetite, typically speaking. Correlations come and go, but that one's a fairly strong one, and I guess we could say, well, the S&P is rallying here. So Dale, I want to get your thoughts here on the S&P. Now, I think we are in a long-term, and I'm just giving you guys my 50,000 foot view. I think we're in a long-term, and every ForexAnalytix subscriber that listens to me, not on the private shows, know this, that I think we are in a long-term consolidation. And when I say long-term, I'm talking well into next year, and quite possibly into 2025. Unless there is a catalyst that drives us one direction or the other. Lower. I do think that we're in a long-term consolidation. You got to trade it as such, and these levels up here are going to be very good for selling, especially as we are going to get some really early indications on how I think soft the consumer spending is going to be this holiday season. And we're going to be getting that, not next week, but the following week, when we start getting preliminary reports from Black Friday, Cyber Monday, and you're going to see just how inflation's starting to bite the consumer, and how consumer spending is contracting, and I think that's going to weigh on the markets as we go into year end. I think the seasonality is just played out, so I think that we are in the zone where you want to be selling risk, not necessarily today, but I'd say over the next week or so. What are your thoughts about the S&P where we're currently at, Dale?
I don't really know what to do with it here. So I think we're probably going to try 4,600, maybe get a pullback from there. But, to me, it looks like new highs or a test of the all-time high is probably in the cards.
Really all-time highs, huh? All right, K-Man, you have any views on markets in general?
The dollar's
Um,
bad. You could buy the world, Blake.
That's true. It's a one world market.
Well,
What's up,
one
Kay?
way. I mean, well,
yeah,
all one market. So
yeah, it is. It is, Dale. It is. Yeah, any views on well, the S&P, we are in interesting zone right there. I was showing it on the flow show as well, up to what is it, 45, 35s or so. Don't we have what should I say? Don't we have OPEX as well today?
We do. I guess it is
Hmm.
third Friday of the
A bit
month,
of
so we should have.
volatility.
Yeah.
But it looks like we are consolidating. And again, yeah, that's yeah, there it is, your 45.50 here. If that goes, then we cannot. It's probably there's probably another round of FOMO coming. Yeah.
Yeah. And so this is the level that K-Man's discussing. It's the 88% retracement. It's usually like the last line of defense for anybody that's trading a retracement. Even though I'm not sure,
it is a good level to try it and be wrong over 46. So you're close to. I don't think you want to stay short over 46. So
right, and that's and that's the thing. After having such a big move, and let's not forget the reasons why we saw this move, and it all started with the Treasury. Actually, I believe it started with the BOJ the night before, like the BOJ just not moving. It's just like several catalysts that drove the markets higher. Then the last straw was a CPI this week that just it's the last straw that broke the camel's back and had everybody chasing after the market's already up 6-7% because positioning is just poor. But the market, as you all know, loves to stick it to as many people as possible. And when you get the market wrong-footed in one direction, wouldn't be surprised to get the market wrong-footing in the other direction. I'm a big believer of that. So after this 10% move or so in equities, I am going to be looking to go the other direction. And I think that that a lot of people are going to be a little screwed here. So anyway, one of the other big developments that I'll be going into next week is something that I talked about on the trade-off show this week with Chris Weston. I am looking for the dollar Mexican peso to find some support down here around the 17 level. So and this is I'm going to play that into next week. Hopefully we get a little bit of a dip down to 17. What's the best trade you're looking for, K-Man, as we go into next week? And by the way, Dale, do you have an interview? I'm sorry, I should have asked earlier.
Ben is here.
Oh, Ben Maldonado. Love having Ben here. So good. I won't dip into that time. K-Man, what are your thoughts going into the next week? And what's number one on your hit list right
so
now?
number one is really, is the bond market going to absorb the next round of US Treasury issuances?
When is that?
And if we look at the package that we had this week across, actually, first of all in the US, but then across the globe as well, we are seeing the effect of those hikes coming in. So the rest of the world is starting to slow down is perhaps a big word, but anyway, less buoyant than before. And I think next week is somewhere where we are going to see, are those yields going to continue to soften, or have we found the bottom and a bit of a top in the bond market right now? And I think it's going to be important for what's going to happen all the way into the end of the year. So that is something that's going to be really close on my radar. And if I look at crosses, for instance, then I'm still looking to somewhere perhaps be a bit short euro or short sterling via cross, and I do like, for the time being, Aussie Kiwi on the long side. So those are my main kind of trades and focus right now.
Nice pivot, really, off the 50 and the 200 DMA, and and the hold of this support at the 50% retracement on the Aussie Kiwi. Thanks, K-Man. Hey, just real quick, we have just some housing data coming out in a few minutes. Look, you know, if you live in the U.S., the markets are kind of, you know, stuck, you know, as far as housing goes. You know, but it'll be interesting to see what the building permits number is and housing starts, because if you're a home builder, you're trying to take advantage of this low inventory situation here. Oh, here we go. Housing starts. Yeah, they're better than expected. Building permits.
Bit better.
Yeah, that doesn't surprise me. I mean, they should be, because like I said, inventory isn't moving. And so with anything that's existing, so everybody's building as many apartment complexes as possible and new homes to try to get that inventory, you know, back up, you know, to you know, take in any new buyers that are coming in and paying these rates. So anyway, that's not too surprising to me. Dollar's getting a little bit of reprieve, but that's pretty much it. And you know, Kman, I want to say thank you for holding down the fort on the Flow Show. Ryan has been out with COVID for the last couple of days. Unfortunately, it's made its way around his family, so hopefully he'll be tip-top shape on Monday. But Kman, thank you for stepping in and being the one-man band on the Flow Show. If you guys don't know how to get to the Flow Show every morning, and it broadcasts while I'm sleeping, and same with Dale. Make sure you get over to our you know, webinars page. You can see the Flow Show. You can just register and listen to it right there. So Kman, thank you so much.
More welcome. Have a great weekend, everybody.
Yeah, have a great weekend. And Dale, I know you're going to bring in Mr. Maldonado. I love having Ben here. Ben is the big picture guy. So if you know, you guys and gals need to make sure you stick around for this interview. And Dale, thank you for guiding us each and every week, and thank you for wishing or giving Nick your birthday song, because it's always a pleasure to hear.
Okay, Blake, thanks very much, and thanks, K-Man. Have a great weekend, man.
You too, Coach. Thank you.
And Blake, thanks. And I have I have a Ben and a Ben Maldonado here on the panel. So I'm going to guess it's I know Ben spells his name with two N's, so
you got me,
Ben?
Dale. Yeah, you got me. You got me.
All right, because there's someone else that signed in with one N. So know thy guest, you know, in if you're a broker, it's know thy customer, and
yeah,
for me,
exactly.
Know thy guest. So it's really great to have you back, Ben, and always look forward to your view. And the world seems to be acting like everything's okay, and you know, maybe it is okay, but there's so many things going on. I'm interested in the epic cycle and what it's telling you going into the end of the year.
Yeah, I think Dale, it's good that you asked that question, because I was thinking about the topic and what we were going to do a couple of weeks ago, and I said, you know what, it's time to go deeper into the epic cycle. It's time to, you know, get a little more detail and a little more visibility because of where we are in the cycle. I mean, we are coming up on sort of the what I call the final phase. So I think it's important we go into that and see what are the ramifications, what are the, you know, again, nobody alive on Earth today has ever gone through this. So we don't really know what it's going to be like and what's going to happen. We just know what the background frequencies and the cycle is going to support. So based on that, we can make some inferences. And I think, you know, there's a lot of smart people that you talk with every morning, you know, all the team you have there at ForexAnalytix. And I want you guys to think about it too. Like, what are the possible ramifications given these factors that we're going to be there? Because I don't think any one person is going to be able to figure this out. But I think putting these minds together and having other, yeah, we can come up with, okay, what are the possible angles here from an investment standpoint? So we're going to do the it's going to be a little bit different than we've done the last few times. We'll cover the major cycles. We'll start with the 70s and what's going on, connections there.
Let me just get an update on, I know what your positioning has in case it's changed. Still bullish the dollar?
Yes.
Okay, so this is a dip to buy.
Yep.
Still bullish gold. You're getting great action.
Absolutely.
Still bullish Bitcoin. Hell of a
Yes.
rally.
Yep.
And S&P risk, that wasn't it. So that's still set up for like February of next year.
No, the S&P is interesting. I'm in Blake's camp, and I've been sort of tactically going long, tactically going short, depending upon where we are in this kind of range that we've been in.
Okay, so you think it's a range.
But and next year, second half of next year is when I think the dam breaks. So until then, I think you got to be tactical. Once we get to that point, that's when the next sort of big short setup's going to be.
Okay, mid-year, so the market will be under pressure into the 2024 elections. That should be fun.
Oh yeah, that's going to be wild, I think.
Okay, buddy, go ahead.
Yeah, so we're gonna go deeper into the epic cycle and talk about this final phase that we're entering. For the current cycle, we're in the last few years of a 400-year cycle, and then we'll go into the why I think we're seeing this trading range. Because there is a narrative battle. It's the inflation versus deflation camp, disinflation or deflation camps that are fighting it out, and as one narrative takes hold, whether, okay, yeah, we're in an inflation regime, a certain thing happens in the markets. And then when the disinflation or deflation camp takes the lead, something else happens in the market. And I think it's a secular versus cyclical thing that we'll talk about. And then we'll go into the various markets that we want to highlight. So let's jump in here. As you know, Dale, for the last 4 years or so since I've been coming on, we've been talking about this connection of present day to the 70s.
But Nixon wasn't able to run for re-election and be president again.
And maybe we're going to see that.
That's a different scenario, isn't it? I mean, that was it. He faded off the scene, went into hiding. The opposite happened with Mr. Trump.
The opposite happened with Mr. Trump, but if you look at, I know we don't compare Nixon to Biden, but maybe the same fate's going to be Joe Biden's fate.
Maybe
he's not going to get to run again. Maybe we'll see.
Okay.
We'll see.
Anyway, I just think that it's unusual, or and I'm thinking maybe that's part of the epic cycle because it's so unusual that a president can lose an election and then come back 4 years later and run again. Has that ever happened in our lifetime?
I think
so.
not in our lifetime, but I think one president did that. I forget who it was, like Buchanan or someone.
Okay.
Either came back and ran again or something. I can't remember exactly.
Okay.
But the key one is that we're working off of now is the Jimmy Carter, Joe Biden. And we got another hit on the connection, not a pleasant one, but there's the Yom Kippur War of 73. And of course, we had the war broke out last month between Hamas and Israel. This one is an interesting one, too. And anybody that was around in the 70s, I was just a little kid, but I do remember Carter's crisis of confidence speech. Remember that one?
I think I was playing basketball.
Anyway, it was.
Oh, you were a baby, but
yeah, it was basically about, the only crisis Carter was saying is your perceptions and confidence and people's beliefs. And if I swear to God, it came back with this whole last summer when they started with this Bidenomics thing. Like, you don't know how great the economy is. Let us tell you how great it is when everyone's saying how hurting they are and their finances are. And, the bottom line of there is that real wages have gone down for 2 straight years because of the effects of inflation. And that's why people are feeling terrible about it. But the parallels again between the 70s and now, they just keep coming back. And if you go back and look it up on YouTube, if you never saw it, look at the crisis of confidence speech by Carter. It's the same sort of plaintive thing, like, don't you know how good things are? They're not as bad as you think. And it's the same message that the Biden administration was getting out there with this Bidenomics stuff. So these connections are still there. What does that mean? Is that, you know, the key characteristics of that period were economic malaise, inflation, and war. There was war, and we're seeing those themes crop up again and again and again, time and again, in the present day.
Okay.
Now let's dive into the epic cycle. We've talked about this cycle for 3 or 4 years now that I've been on with Dale and doing these interviews. And it's hard to focus on a cycle when it's 400 years, because how do you trade a 400-year cycle?
Big
Well,
stops. You need real big stops.
big wide stops, yeah. Year-long stops. But the thing here, that the reason why it's so important is it guides, you know, sort of the overall trend and the overall direction of society and the globe. And right now we're entering the very last phase of this. We've been in this phase that I've talked about, of where we were losing confidence and trust in the system and the institutions and the organizations that we've created to run our societies. And there's, you know, all kinds of evidence of that. You see it every day, and it seems like people are getting numb to it now. Well, the phase that we're moving into is not just a loss of confidence and trust, but the actual failure of those systems. And I think what we're in the process of seeing is that this covenant between governments and people is breaking and is broken. In other words, we made a pact years ago where, okay, we're going to have an elective democracy, or we're going to have these governments. We agree to pay taxes. We agree to follow these laws, provided that they do things that are in our best interest as a collective. And there's the perfect example. I have it. It's a local government thing. Here we have this road where it was 2 lanes, a split road, 2 lanes on each side. And 71% of the people in the area wanted to keep it that way. And yet the people in charge shut down one side of it to make a walking trail. And they've caused traffic problems and issues, and everybody's upset about it. But it was an example of where the governments are no longer accountable to us. They seem to be doing what they want. And, you know, another example is here locally. I went in last year for the election. I went in to vote. And the choice for one thing, it was wasn't a county commissioner, but it was some position on a county or some board, and every single person on there was from one party. And as I was looking at it, I said, we don't have a choice here. And the issue is not whether they're not accountable to us anymore. They're accountable to the party, whatever party it is. And so I think that's a lot of the discontent we're seeing with people, is that disagreements between, you know, the society and the governments and the people is no longer valid. And the ramifications for that are huge, which I'm going to talk about next. And also it appears in this epic now that we're heading towards a multipolar world, not the hegemony we've seen for the last, 100, 150 years. Or if you look at, it was British hegemony, then it was our hegemony. You're talking about, 300-400 years, like the whole cycle. So we're moving into an era where it looks like, I say, every man, in this case, every country for themselves. It's going to be a much less organized, much more messy, much more individual interest as opposed to a collective interest going on here.
Okay, what do you think about the message from space, that comet that was here 2 months ago? The last time it was visible on Earth was 400 years ago, so around the beginning of the epic cycle.
Yeah.
And now it shows up again to put a period on it.
Exactly. It's like it's like going to be the dramatic, sort of close of one opening of another. And the key thing
when
about
I heard
this,
it was 400 years, you know who I thought of. Right?
yeah, I know. I remember you and I messaged and we
Yeah.
were talking about that. It's true.
Yeah.
It's absolutely true. And the thing to think about this epic cycle, you know, I know there's the doomsdayers and the end of the world types. It's not the end of the world. This is an evolutionary process. And through evolution, something dies so that something new can be reborn. And that's exactly what we're going through. You know, the scary part is we don't know how it's going to play out. How are things going to die, and what's the new system going to be like? We don't know for sure, but I can, and what I'm trying to do is share with you some of the possibilities and things where probabilities favor it, because this is what the cycle is going to support. 1616 was the last time we had this kind of change, and it's dramatic change. It's big change. In 2027, we're going to change again, similarly to how we did in 1616. Not with the same results, obviously, because it's a different cycle, but the magnitude and the effects of the change are going to be massive.
What were the big changes in 1616?
1616 was when we started seeing the exploration. Pilgrims, explorations, colonies, you know, the expansion of
the
sort
world.
of the world and civilization and the growth of the planet in terms of population and countries and organizations and wealth. All that stuff was sort of, that's when it got kicked into hyperdrive because of the the Dutch explorers, the Spanish explorers, the British explorers, all
the new world, all that land that they didn't know existed prior.
Exactly. So, and people that they didn't know existed. So here, and in the next 2 years, why I think this is so important to get into, we're in the final 2 years of a 400-year cycle. And this phase is where there's the deterioration and destruction to create the sort of fertile ground for whatever's coming next. What we do know is that everybody on the planet's going to be effective, and the change is going to be dramatically different than what we have experienced. Now, couple things. When you're talking about a 400-year cycle, it's not going to be you wake up one morning and the world is different. It's going to be a transition of probably 20 to 30 years as this new system gets established and sort of cemented into the way that things are going to be. To completely put it into place, it's probably not until 2100, about 70 years. But this, and you can, and when you look at, go back to 1616, if you study history a little bit, they started exploring, they started colonizing, but the sort of the democracy that would become the world power wasn't formed for over 100 years later. The U.S. wasn't officially formed until 1776.
Yeah.
So it's again, keep in mind, it's not like turning on and off a light switch. It's more of a gradual change in an implementation. But what we're going to experience in the next couple of years is real, and it's going to be pretty dramatic.
Okay.
This is a chart I put together, a slide to show all the different systems that we've over the last 3-4 years have been losing confidence in and losing faith in. The new one that I added in yellow is big cities. I mean, go just in our country, go around the country and look at, you got Baltimore, Philadelphia, New York, Chicago, LA, San Francisco, Seattle, Portland. Major cities in this country that are just, it's a mess. I mean, absolute mess. The sense of order, the sense of justice, of sort of organization and control in those cities is gone.
Unless Xi visits.
Right, unless Xi visits, then they buff it up and clean it up.
Yeah, they
but
put lipstick on a pig.
That's what
realtors do.
and it's a sort of a preview of what's coming. Cities as we know them are done. They're not going to function properly anymore. major cities.
Okay.
Here's the screen this is the one where I want everybody to think about it in their brain and think about, the possible ramifications, knowing that these things are the major themes that are going to be supported. I call it the death of large cities. The new cycle will have no support for maintenance and the infrastructure in these cities. So maintaining the streets, if you look at San Francisco, providing the services that cities need and require, there's not going to be the resources for it. And this is, again, this theme of the bargain between the individual and the collective, or the taxpayer and society, has been broken. It's over. So one major ramification I put here, and this was sort of tying in something that I was thinking about because of the amount of debt that has been issued by governments in this cycle, is we're going to see government defaults. Either people are going to stop paying taxes, or, as is happening right now, they're voting with their feet. Right? People are leaving California, they're moving to Tennessee, Idaho, Montana, Texas. People are leaving New York, they're moving to Georgia, South Carolina, Florida. They're going where the tax burden is huge, but the services that they were supposed to get based on these taxes they were paying are just they're not there anymore. So government defaults, I think we have to focus on that, and I'll talk about that a little bit in my outlook with the dollar.
Okay.
The next epoch is not going to support the growth in population like we've seen in this current epoch. The cycles are not supportive of population growth, and if you've studied economics, population growth and economic growth are connected. You cannot have economic growth if your population is shrinking. It just doesn't work. If you don't have the workers coming into the workforce, you don't get that productivity, you don't get that GDP growth. And that's something we have to know, is that we're moving into an era of subpar economic growth as compared to the previous epoch, where we saw massive growth. So
is it strictly the demographics, which have been happening for a while, or other events, epic cycle events, that can reduce global population, or possibly planned by the puppeteers to reduce population?
Well, I have highlighted war, and wars certainly seem to be choreographed and planned. So it may be natural events that result in population reduction too, like disease or famine, or it may be viruses and war that reduce the population. I don't know how it's going to play out. I have no idea, what the mechanisms are going to be. I just know that the cycle is going to not be supportive of what we've had in the previous one, which was, yes, we have good population growth. Yes, we have strong economic growth. Those things aren't going to be present. And maybe it's going to be because of, the perceptions and the effect on the humans in terms of what's important to them. Like, we've come out of a very materialistic period, right, where building things up and getting more and accumulating, that was the most important thing. Maybe that's going to change and affect the human behavior. And that kind of gets us to the last one.
NFL guys aren't going to be getting like 4-year contracts for $100 million?
I don't know. If it's not something that's valued by society, it's not going to happen.
Okay. That's crazy.
And here the focus going forward is going to be on individuals and not the collective, not society. So everything's going to be more locally concerned, like your little neighborhood, your little community, as opposed to a county, a state, a country. That the emphasis is going to be more on individual issues as opposed to the collective issues and societal issues. And that's going to have ramifications too. What they are, This is what I think the group needs to think about. You know, if the focus is on the individual, what's going to be? I have some ideas. I think it's going to be more of, you know, where do I get my food? Where do I get my fuel? How do I take care of my family? That kind of stuff, you know, more survival issues.
Right.
Now let's talk about the narratives that are battling right now, inflation versus disinflation. As you know, Dale, I'm convinced we're in a sort of a redo of the 70s. So for me, it's the argument always boils down to secular versus cyclical, right? I believe we are in a secular period of inflation where overall things are moving, prices are moving higher. It's going to be sticky. It's going to have periods and times where there's disinflation or even deflation. But the overall big trend is that prices are going higher and inflation is going to be a problem. And I think the push and the pull we've seen in the market, you know, with these strong rallies, sharp sell-offs, reversals and all, is this what one of the narratives takes hold. This is what happens because bonds and stocks and risk have been positively correlated for a while now in this bear market. When we get the disinflation narrative that takes hold, bonds rally, risk rallies. And then when the inflation kicks up again and people say, yeah, inflation's not dead yet, it's still coming back, you know, bonds get sold and risk gets sold. And we're going to, I think, continue to see that play out until the next actual crisis takes hold, which we'll get to the timing on that. I mean, have you seen that battle in terms of this narrative battle, Dale? Because I know you're on top of all the narratives.
Yes, I mean, this last rally was the match that lit it was yields peaking.
Mm-hmm.
So yeah, the days of, you know, I guess I'm an old timer. I thought there was going to be a possibility that we would have lower rates, and that the reason we were having lower rates would be a potential recession and stocks will get sold off. But definitely, it was just jet fuel for equities.
Yeah, no question about it. And you said it in the previous show. You said it's all one trade right now.
Yeah, well, so I mean, if you're bullish the dollar, almost everything should be declining,
Right.
don't you think?
Yeah. Yeah. I mean, here's, I think once the major trend takes hold, that's what we're going to see. And so the opportunities I see based on the epic cycle and where we are, I think you got to play risk both ways tactically. You know, Dale, Blake was talking about, you know, I agree with his view that, you know, you look to
Big
trade
range.
the upper end and the lower end of the range and just, you know, rock the range. And I think what we've been doing, and I've been posting on Twitter on my Twitter feed is, you know, there's a couple of good cycles that have been really, really hitting well. You know, they caught the bottom of this last one. We caught the top in July, late July, early August. So I think you got to be tactical until the second half of next year, because that's when I think we're going to get the one narrative winning out, and we're going to see, you know, a strong sell off and some panics, whether it's caused, you know, by sovereign issues or some other sort of debt issue. That's what's coming next year, and I think that's when you can take your you know, sort of your trader hat off and put your bear hat on and ride the market down then. There's some epic cycle plays I want to talk about, like the ones we talked about before. I think you got to look at hard assets. I think you got to look at the commodity side. I do believe we're in a cycle of outperformance there. And if we are going to have these displacements and other issues associated with the epic cycle, hard assets are what people are going to value, right? It's going to get back to sort of I don't know if it's the right word or not, but the word that comes to mind is more primal needs, right? And things that are solid and not, you know, ephemeral are what people are going to value.
Have
And
you
that's
been
hard
long
assets.
energy products through this huge decline?
Not on nat gas. I've traded a couple times. I traded some on the oil side. I'm not kind of putting it away yet, sort of thing, because we're still seeing this belief in that demand's going to crash and therefore we're going to have so much supply because we're getting a recession. I just think the supply demand dynamics have changed there in the commodity space. I think they're just going to be in short supply. So you got to trade them, especially if you're using the leverage products. But I mean, like the
Where's the
gold,
bottom in WTI, Ben?
if we don't hold in this 73 area, and I'll show you on the chart, I think we could have a washout, because you know how all the commodities basically before a big move in one direction, you get the false move in the opposite direction.
Clean out longs.
I think we're getting a clean out move right now in oil.
Okay.
So let's jump through the charts real quick, because I don't want to keep you late on a Friday. So here's the this is right in here. We got the cycle change here for this short-term move. In July, we were looking at a late July high. We got that. So you got to trade these legs for now, the next big move, like I said, is not the big trending move where we get a directional, super strong move and not these sort of tactical moves, is not going to be till, based on my cycle work, until looking like August, September of next year. And the fact that that's a few months before the election also has me thinking, what the hell is going to happen in that election? But we'll see.
Could we blow off to new highs? The melt up people are talking, I don't know, 5,400 to 6,000 S&Ps.
I don't know about that high, but I do think, if things get crazy next summer, sure. You get a rally next year on some sort of optimism that it's soft landing and no problems. And then, we get some sort of debt crisis or political crisis around the election, late summer, early fall. And that could really, really set it up for a big, big down, especially if everybody, gets on one side of the boat in a melt up. So it's possible.
Okay.
NQ's similar, right? Trade it, be tactical for now. And cash, holding cash is not a bad thing. I got a lot of cash in my retirement plans, and I'm really happy to be there, just waiting for the fat pitch, as Stan Druckenmiller likes to say.
And what's that? What's the fat pitch that you're waiting for?
Like if we get a blow off in equities, a short in equities there.
Okay.
If we get a clean out move in crude, that I think we might into the low 60s, that would be a great fat pitch. Gold.
Well, let me ask you this, Ben. Where do you have like your assets domiciled? Looking at this, I mean, do you feel comfortable there? I mean, there's still banking problems,
Mhm.
and you're talking about debt problems and the whole system being reset. Um, do you feel secure in these institutions that you think are going to go away to keep assets there?
Yeah, that's the problem, right? That's why having some
It is a problem.
physical gold or physical silver is not a bad idea.
Yeah. How about
That
cash outside your IRA and under your mattress?
or in a nice floor safe somewhere.
Yeah.
That's not a bad idea. I mean, I'm not
So I
listen,
mean, what?
I'm not a doomsday prepper, but you got to be
Okay.
smart when you're going through the last days of a 400-year cycle that nobody alive has ever been through. You have to have some contingency plans, right? You have to think like that.
So I mean, really, where do you keep your assets in this culmination of the cycle that you could count on them being returned to you if you want them?
Yeah, I mean, I would personally only the big major banks right now. I know you've talked a lot about them trying to wipe out the regional banks, and they may end up doing it. So you got to protect your assets. I think holding your own physical metals and some cash is not bad. The
Is a
Bitcoin
CBD?
Bitcoin's a way to get out of the system, so having some of that's not a bad idea.
Yeah. how about how does CBDC fit into the last couple of years of the cycle? Will it be implemented before the cycle ends or after? What do you think?
I think they're going to try, but it's going to fail, because think about that. That's something
All
from the old cycle, right?
yeah, that's
Because
ultra control.
exactly. And so it's not individual, it's not dispersed, it's not it's and the funny thing in watching the cycle, Dale, is you can see how the desperation of the people who have control now trying to expand it and hold on to it as the cycle's turning against them. It's kind of like sort of the last gasps of a drowning man type thing, you know?
Yeah. Okay.
But that's what they're trying to do is not supported by what's coming. And that's the good news. The bad news is we don't know what's coming. We'll have to see what happens. So gold, I think you got to own gold. It's a confidence in the system type thing. And if the system's going down, gold should soar. Same with silver. And you can see these are monthly charts. So these things have been basing. They haven't really pulled back a whole hell of a lot off their recent highs. They've just been kind of going sideways, which tells me that, you know, there's people accumulating them and they want to own these assets. Here's Bitcoin, as Dale said, since we last met, you know, nice little rally there. I'm a little concerned about the fact that the powers that be may want to kill this thing. So I'm a little cautious there, but I do think the premise of Bitcoin certainly supports is supported by where we're going in the big cycles.
If
Crude,
if they're going to kill it, that's there are other ways for it to be useless, like no internet.
Yeah. Yep.
I think people in Australia just went through that.
And you know what, Dale, I was thinking about that too, because again, I'm trying to think big picture, and I want you all to do the same thing. Elon Musk's Starlink is probably a fantastic way to play this whole dislocation.
Yeah.
You know, it's not relying on the government in any way. He's putting up this private satellite network to give you internet access and stuff. So I don't know if he's ever going to try and take it public or give people access, a way to play it. But I think that sort of thing, like a private system, is going to be an alternative that we're going to see to the current systems. Okay. Anyway, there's crude. Yeah. That's the move that they might be doing, Dale. So maybe they take it down and we take out, you know, false break on the lows we saw here in 23, you know, in 2022, 2023.
I don't see the price. What was that price? 60?
It's around 60. Yeah. 60, 62 in that area.
Okay. All right.
It's possible they try a clean out move. If they do, I think it'll just be, you know, one to get long on. I heard you talking about this a couple of weeks ago, nat gas.
Yeah.
We broke out of this little triangle. This was about a 6-8 month triangle. So it's a hell of a base. And now we're just back testing the breakout. So I think nat gas looks good to own that. Soybeans look really good. You know, again, has not corrected much off of the highs it made on this first run, unlike corn and wheat that have pulled back pretty sharply. So I think owning some ags and owning food is not a bad thing in what's coming. Cotton's one I really like. It's been building a base for many, many, many months. And as you know, commodities go sideways and do nothing for a long time, and then they explode. All you got to do is go back and look at cocoa to see what can happen. Cocoa broke out of a multi-year base, and it's, you know, just continuing to make new highs now. Coffee's another one. Hasn't pulled back dramatically. It's holding support, starting to reverse. I think you can look at coffee. Here's the dollar. The dollar, I'm not. Brent Johnson has his milkshake theory, and I'm not a milkshake guy. I don't actually know what he means by milkshake, but my theory on the dollar, why I'm bullish on the dollar, is it's going to be the tallest midget. Mm-hmm. Right? All fiats are going to die. Right? They're going to die. It's inevitable. The dollar will just be the last one. And so money assets, capital is going to come into the dollar when things start falling apart, which is why I think we'll see all this dollar strength. Doesn't mean the dollar's going to, survive and be the reserve currency and all this other stuff, but it'll be the last to fall.
Okay.
And so that's the theory with the dollar. And then we'll end with bonds. Bonds, this white line here, Dale, is a 40-year trend line. So we just finished a 40-year bull market in bonds. Ended in 2020. I don't think we're going to get away with just a 3 or 4 year bear market in bonds.
No.
After a 40-year run. So are we getting a bounce? Absolutely. We actually have a monthly reversal, so we got an up bar. Maybe we get a couple, 3, 4, 5, even 6 months up.
Where's that take at 110?
It can go if we go all the way up to the line, we can get up to about 120, 125.
Okay. Yeah.
But I do think there's new lows coming. I think higher interest rates are coming, and I think that's based on the fact that we're in a cyclically or a secular period of higher inflation.
So we have this bond market rally into the spring. And then inflation starts to, we start getting bad numbers again. Maybe crude is bottomed on its way up. And the Fed, just like the 70s, had to come in 2 more times before they broke it.
Yep.
Is that what you're thinking?
I think we're going to see the same thing, like a 3-drive inflation pattern.
Okay. We completed 1, we're pulling back, and then we're going to have 2, a pullback, and then 3.
Right.
So that I don't know how many years when the first tightening cycle started in the 70s, but I know the last one was 79, 80.
Yeah, I think it was, believe it or not, the late 60s was the first one, the first tightening cycle.
14 years of doing that, huh?
Yeah.
Okay.
I mean, so I do think we're in for that kind of thing. The bigger picture and the themes that I discussed are basically to help people understand and be prepared for what's coming. I don't know exactly how it's going to play out. I just know that we're going to see things very differently over the next 2 to 3 years. And then going forward, when the new system comes in, in the next 20 to 30 years, things are going to be different. Doesn't mean they're going to be better, worse, the same. It's just going to be different. And we have to be open to that and have an idea of what is going to be supported in the new cycle.
Ben, go ahead.
And I was going to say, and know that what's currently being supported is going to be destroyed.
Okay, Ben, I think this is the most important question that anyone has ever asked you about the epic cycle, because it's not really market related. I'd like to know how you, with your beliefs of what's ahead of us, is able to overcome that and enjoy the now.
That's a great question. That is a great question. I think the main thing I look at is that I can't control what happens tomorrow, next year, 10 years, 20 years from now. All I can do is control what I can deal with today, which is how do I put myself and my family in a position where we're secure today? What do I do today? So while I have these big picture themes in mind, when I'm trading, I'm fairly tactical.
Forex gal said day trade.
That's right. You've got to be tactical. Maybe not day trade, but that's one of the options. Have contingency plans, right? Be thinking about, don't go all in, don't YOLO, don't, all the stuff that was happening in the excessive part of the cycle. Don't get into that, right? Don't focus on that. Focus on how do I get into a trade where I have good risk reward and I have I have the cycles at my back, right? The odds in my favor.
Okay. All right. I do it with gratitude
Gratitude's a great
because
thing, right? You're grateful for what
if
you
you,
have.
yeah, because you can't be grateful and worried and depressed simultaneously.
Mm.
So staying in the now is filled with gratefulness for today. That today is a great day.
Yeah, and
And I'm just saying there are times I have a difficulty with what I see coming, and having it kind of enter my psychology about in my life.
mhm.
And it's really not an optimism. You could say it's not the end of the world, but it's a different world. And I don't know about you, Ben, but I'm pretty attached to the world I grew up in, and sorry to see it evaporating.
It is. It's sad, right? That's the death part. That's the death. Something's dying,
Yeah,
and we have to look at the something's being reborn, right?
I've
So
tried those too, Forex gal.
so the
Anyway,
no, it's a great point, Dale. And one of the things that you do is focus on today, right?
yeah,
Focus on today.
yeah.
What can you do to make a difference today? Make a difference for you or your family.
Ben Maldonado, everybody, the futurist using the epic cycle to direct people that have open minds to preparing for what may be down the line. Thank you, Ben.
My pleasure, Dale. Have a great Thanksgiving, everybody. Dale, you have a terrific Thanksgiving, and we'll talk soon.
Thanks, Ben.
Okay.
Happy Thanksgiving to you, and thanks for joining us today.
Thanks,
Yeah, and
Blake.
someone said we have F.A.C.E every day to look forward to.
Yeah, I mean, you guys do a great service. Let me tell you, I listen I try to listen every single morning because you get this perspective from multiple people about what they see and what the angle is, and that's one of the things about trading is nobody has it all figured out. And when you listen and you have an open mind, new information comes to you that can help you, and I think you get that from you guys every morning. So I appreciate what you guys do.
Okay, much respect to you, Ben, and happy Thanksgiving and the holidays, and we'll get together next winter. And I know it sounds like a long time, but it's not. We're only
No.
a month away. So I'll get in touch with you, and we'll see where we're at in the epic cycle. Say February-ish. Okay,
Sounds great, Dale. Looking
and you could
forward to it.
also maybe be my Valentine. All right.
That would be great.
All right. So that's it, everyone. Hope you enjoyed Ben. I always enjoy talking to him, and hope you've had a good week. We've laid it out on the court for you guys. Been some great ideas by the team this week, and have a great weekend. Don't just count your pips, count your blessings, and we'll do it all over again next week. You're welcome, Joe, Forex Gal, Sell Bonds. Okay. Adios, everyone.